Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's Thursday, the 17th of November, and we have our regular Thursday guest, David Kuo, founder of the Smart Investor Singapore. David, good afternoon.
Hey, selamat tengah hari, Brian.
Now, selamat tengah hari. Now, before we get your sagely insights, David, we're going to take a look and read out the numbers and see what the region looks like. But first, we start with Bitcoin, which is at 16,517. It's down 2.33%. Ethereum is at 1,204. It's down 4.25%. Now, looking across to regional stock markets, we start in your backyard. The Straits Times Index is up 0.1%. Bursa Malaysia, however, is down 0.25%. Shanghai is down 0.95%. The ASX All Ordinaries is up 0.06%. The Nikkei is down 0.039%. The Hang Seng is down 2.59%, 2.6%. And rounding up the numbers, we've got the Kospi, which is down 1.19%. David, it's pretty much more towards red than green. Tell us why.
I'm glad there's one green in there somewhere, Brian, because otherwise it would be a clean sweep and it would reinforce everybody's views that whenever I come on, the markets are down. But in general, I would say that most markets are sitting on their hands at the moment, apart from Hong Kong. And Hong Kong is down primarily because of those disappointing results from Tencent and the fact that Tencent is going to be paying dividends by distributing shares in one of its main investments, Meituan. So essentially, that was why Hong Kong is down. But I think the rest of the market is generally trying to digest all these Fed governors that have been out there talking about interest rates. And it really is a very confusing time for people. Are they or are they not going to slow down the rate at which they're going to be increasing those Fed fund rates? And I think it still is pretty much in the balance, apart from the fact that when you have a look at the Fed fund rate, 4%, when you have a look at inflation rate in the US, 7.7%, I think it is quite likely that interest rates will continue to rise. But the big debate is, when are they going to reach peak interest rates or peak Fed fund rates? And I think that is really sort of what is weighing on people's minds, because the data that is coming out from America is also very confusing. You have some companies that are doing very well, like Walmart. Then you have other companies like Target that are not doing very well. So big retailers out there are bifurcated in some ways. You have some that are doing well and some that aren't doing very well. And people are trying to take all of that data in hand and say, what is actually happening to the American consumers? Then, by the way, we also have another figure that's come out, which says that credit card balances in the US are rising. And it seems as though people are paying their way in the US by putting their money, putting whatever they purchase on credit cards. And that is a disaster, I should think, Brian.
Now, also in the US itself, David, you've got the specter of rising unemployment, because essentially, and we talked about this 2 weeks ago as a prelude to it, the tech layoffs have been accelerating at an alarming rate.
And again, it really depends on what tech companies you're talking about, Brian. Yes, I think, most of the platform companies are not doing particularly well. But then again, you have some of the hardware companies. We got results from Cisco last night, which says that recession, what recession? So for a company like Cisco, which is what some people would call a dinosaur of the tech industry, that seems to be doing well. It seems to be doing quite well. So again, it's very, very confusing for people. Is the tech sector in the doldrums, or is the tech sector doing reasonably well? But you're right to actually sort of point out that there are layoffs going on. Amazon is talking about layoffs, and today I saw a story that Twitter is laying off a lot of staff over here in Singapore. Then we also have another company called Sea Limited, which has also been laying off staff. And as a result of those layoffs, Brian, they have been able to more or less turn around or steady the ship. And consequently, its share price rose and its market valuation also rose. So I think we're in that stage at the moment where we are in very, very choppy waters, and people need to navigate these choppy waters very carefully rather than say it's full steam ahead, let's pile into the market, let's go in and buy and be very selective about what they are buying. And if they are selective, I think they will be able to navigate not only the end of 2022, but probably the most part of 2023 as well, in spite of the interest rate increases, which I think will carry on over in the Fed. And it's going to be very interesting times, Brian.
Now, David, now closer to home, G20 summit is happening in Bali right now. The optics are quite interesting. What are some of the key takeaways that you've seen so far in terms of the G20?
I've always been very skeptical about these meetings, where you sort of get 7 countries, like in the case of the G7, or even in the case of the G20, when you get 20 countries out there. What people seem to forget is that they are 20 different countries. And as a result of that, trying to get some kind of consensus, even for something as important as, say, the Ukraine war that is going on between Ukraine and Russia. And to actually sort of come out with a communique that says that most countries are against the war in Ukraine. I would have thought they would have come out and said all countries are against the war.
With the exception of Russia, of course.
Well, exactly. I mean, all countries should be horrified by what is going on inside between Russia and Ukraine. But the fact that only most countries are against it, rings alarm bells as far as I'm concerned. But there is some consensus, and I think they are very concerned about climate change. That is something that they need to take away, because climate change is something that is affecting supply chains, believe it or not. And when you hear about extreme heat in certain countries, extreme flooding, particularly in places like where you are from, Brian, in Malaysia, I think people need to be very aware. And it is the elephant in the room. Unless they tackle climate change, I think everything else pales into insignificance, Brian.
Absolutely. Now, David, thank you very much for your insights, and thanks for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This video will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.